Hey everyone, welcome to the Fireside. Welcome to our new experiment. You are here with myself, Jose. We have Miguel and we have Fahad. Given that this is our first episode, we will give you a bit of a background on who we are and why we're here and why you're listening to this. And hopefully, there will be good stuff that you're going to learn from these episodes, the same way that we hope that we're going to be able to learn awesome stuff. And on the other side, we'll be richer, not just in financial state, but also knowledge. I think that's a pretty important kind of currency to have. So, for today, for our prime episode, we will be giving you a bit of intro to who we are, a bit of a background, and really what we are trying to achieve from these episodes. We will be talking about what is fire. So why did we call this Fireside? I think it's an important, critically important concept that Miguel is going to be diving into. We will then be taking a quick look at some macroeconomic factors that we're going through at this stage and have a quick discussion about them. And finally, we will be having our tip of the week. This is something we want to leave you all on every single episode. And finally, we will be talking a bit about some of our trades and what we have learned from those trades. So without further ado, I'll throw a bit of a curveball. And Fahad, do you want to get started with a beautiful intro?
Sure. Thanks, Jose. So my name's Fahad. So I got into investing in financial and cryptocurrency markets as a way to grow my money. And I've been doing this for the last, I would say, 2.5 years or so. I kind of got in with the wave of new products that came up that make it a lot easier. And they make the investment process a lot less frictionly. So, like with Revolut or some of the other exchanges that I use, it's just been very easy to like invest in stocks or invest in cryptocurrencies. So that was kind of why I got into it, just to grow my money, and felt quite easy to do just from my phone or from my laptop. Whereas I think 3-4 years ago, it felt like you had to kind of be an expert as to how TD Ameritrade or some of these older products work, and you had to buy expensive licenses to get all the features and stuff like that, which kind of made me not think about it as seriously. My objective is to share my perspective because I've had some small level of successes. Um, not necessarily because I've picked the right stocks or because I've picked the right coins. More so on the psychological side, like picking a strategy and then mental models that help people stick to it. And I think sharing that knowledge is valuable. And at the same time, just broadening my own knowledge with you guys and our listeners interacting with us over time, I think will help me get better as well. Because I fundamentally think markets are made up of people, and if enough people believe in something or don't believe in it, that's essentially what drives a market in each direction. Um, and so, just having a broader understanding of what different kinds of people and a broad range of people are thinking of doing, I think that dictates decisions moving forward.
Awesome. Thank you for that. I think one of the nice things as well, just so that everyone understands, we are geographically fairly separated. At least two of us are closer. Fahad, where are you located at the moment, Fahad?
So I'm on the west coast of Canada. So I'm in Calgary, Canada. So a little bit inland from Vancouver and above Montana, geographically. But I've lived in the States, I've lived in Europe, and now kind of making home base Calgary.
Awesome, cool stuff. And On that segue, Miguel, tell us about where you are, tell us about your objectives, and why did you get into financial markets and investing?
Yeah, thanks, Jose. Hope I can do it as well as Fahad did. He remembered everything. So yeah, I'm Miguel, and I come from a background of software engineering. I like to think I have more of an analytical mindset as compared to other investors in the space. And I was drawn into investment and specifically trading uh, at the time of one of the latest Bitcoin booms, which was in 2018. Um, it was a time when I picked it up, or it got into my radar from some colleagues at work when it was at around $5,000, $6,000. Um, and then, as we all know, it climbed all the way up to nearly 20,000 and it crashed from there. So it was a very interesting ride. And it did leave a mix of emotions, but mostly a good aftertaste in my mouth. Um, and so yeah, around that time, another friend who got very excited in this movement shared a video with me about some guy who traded stocks and managed to magically grow his accounts from some, I don't know, 10,000, 20,000 into hundreds of thousands. Um, and I was really inexperienced at the time, obviously, and so that really hooked me, and I wanted to learn more. He invested in what's called penny stocks, which are stocks that are lower priced and most importantly, they have a very low market cap. Uh, and the theory was that if you focused on these stocks, you could see wider price movements, especially percent wise. And so you could see bigger swings in your account. And if you manage to predict some patterns, you could grow it exponentially. Um, I'm not endorsing trading in penny stocks, by the way. This was the journey I came into, and I did realize soon enough that there was a lot of caveats in this manner of trading. But I was hooked. And one thing I did see was that a lot of traders that um, share their thoughts on YouTube or Twitter or in any other spaces, a lot of them seem to have a more how to say a more holistic process. They tend to trade a lot based on feel and based on maybe some statistical analysis to some level. But I realized that that wasn't for me. I really couldn't do it. I couldn't just trade based on guts. And whenever I tried to, it just led to uh, prematurely closing positions at a small loss or holding on to losers for too long. It just wasn't for me. I realized at the time that I needed to have a much more systematic approach, and the way for me to remove my emotions entirely was to look to trade with systems. So that is my goal in trading, is to remove myself from it and try to find statistically sound strategies that even a bot or an algorithm could trade without my influence. So that's the way I approach trading now. And I think it's really good. By the way, you'll hear Jose's introduction later on, but I think this will complement our group because we do, among the three of us, take different approaches to trading. So that's one of the reasons I'm very excited about being a part of this podcast, is to get different insights. And the other one that I'm actually really looking forward to is that having a regular accountability session for whatever progress I'm making is actually going to be very good for me to challenge my ideas and to drive me forward. I think I covered all of it.
Yeah, that's a good one. That's a good one. No, I think it's a very interesting point in terms of that risk profile, right? Because I think everyone has a different risk profile, and I think like it's kind of like relationships where you kind of it's almost sometimes more important to know what you don't like than what you like. And I think with investment, it's one of the things a lot of people will neglect at the beginning, that concept of risk profile and what kind of person are you, because risk profile directly correlates to your psyche and your mental state when things go good or bad, right? But we'll get into it. We'll get into it. Right. So, without further ado, myself, my name is Jose. I've very similar to Miguel. I come from a software engineering background. I have lived in the UK for many years. I ended up coming back to Portugal, where I currently reside with my family. And really, I got into investing. I think I take a bit from what both Miguel and Fahad said. I think it was a mix of curiosity and I would say probably like 60% technology and 40% curiosity. And obviously, I'm kind of talking a bit more crypto, which I think, again, was one of the things that over the episodes and the conversations you'll understand. I'm a bit more drawn to the crypto side of things, and Miguel and Fahad have different perspectives and different approaches to what kind of investments they do. Me personally, I started on a pure technical perspective with bots. So really, there was this one particular bot that I found in late 2016, if I'm not mistaken. That really, what you would do, you would connect it to your Binance account, for example, and you would set your budget, and the bot would go and do its thing. And it's really interesting because I used it for a while, and I used it for to a profit. And it was not cheap, so it did have there was quite a lot of downside if things didn't go right. And I didn't invest high amounts. It was probably around the hundreds of dollars, something like that. It was really, again, it was an experiment. I wanted to understand not just I'm a very curious person by nature, and I've got a bit of a gambling side to me, which is not great in terms of investing. But at the same time, it all comes back to that risk profile. So really, I got into it on the first stage. I'll say like phase one and phase two. Phase one was my YOLO phase. I was just like, yeah, man, I just whatever. I don't care. I'll just do. I just want to make tech work. And then you had the big crash of 2018 where, like many people, I lost a lot of money. And I think that's just touching on a couple of things that both Miguel and Fahad said. I think they were really valuable. I think Miguel mentioned the accountability. And that's something that is very difficult, to be accountable to your mistakes and improve those. And I think with this show, hopefully, you will be taking accountability into the things that we do. And I think we should be honest about, because it's really nice to brag when things go right, but when things go wrong, I think it's important to talk about them. And yeah, in reality, I did lose a good amount of money in that period, because no one was expecting that to happen. And then I kind of stopped, and I restarted it maybe a couple of years later with when COVID started, because again, touching on something that Fahad said, apps nowadays, especially the one that I used initially, which was Revolut, just makes things so incredibly easy for you to invest and just put some money in, right? So, which I think is it's a good thing and a bad thing, depending on, again, what kind of person you are. And then from there, I think I started with stocks. I didn't touch crypto for a while. I was kind of bruised and licking my wounds for quite a long time. But then afterwards, when I started to get some profits from stocks, I decided to start getting into crypto. Also, the narrative of crypto changed drastically, where in 2018 was really Ethereum and Bitcoin mostly, and then there was a couple of other obscure projects. I think in 2020, 2019, 2020 is when you start to see really a lot of cool projects showing that actually brought a lot to the space. And really, what I want out of this is, my objectives are, I'm gonna steal some of those. Accountability, I think, is a great point. But really, I want to learn. I'm very hungry for learning, and I'm a very analytical person. I base my trades on mostly, I would say, 90% of TA. So obviously, TA stands for technical analysis, and really, that's the kind of stuff I like. I actually get quite, that buzz when you kind of make essentially you're writing narratives, and if your narrative ends up playing out, it's kind of like reading a book and you think, oh, this is what's going to happen, or you're watching a movie and I think it's going to happen, and it actually happens. And there's quite a lot of I think there's like a lot of serotonin, probably being serotonin and some endorphins being thrown into your brain, and that's kind of stuff I like. So that's it. Obviously, if anyone is curious about other stuff that we didn't discuss, please do write in the comments. If you have any questions, any things that you like for us to touch on in next episodes, please do so. We are very open to any kind of feedback.
I do
So,
think you made
yeah, go
some
ahead.
very good points, Jose. But I think we are already a bit stretched in time.
Tell me.
About the maturity of the crypto community. Because you said the projects have matured. I also think the community has matured a lot in recent years.
Yeah.
In 2018, 2017, 17, which happens to be the time we both
Yeah.
looked into this, there was a lot of the famous crypto bros in the space. I think
Yeah.
this is mostly faded out. I think most of the people now that are in this space are, people who either like the projects or like them for sound investment reasons, not just the to the moon kind of
Yeah.
memes.
Yeah. No, I
And
agree.
let's
I agree
see.
completely.
I think. Oh, sorry. Yeah, I was going
Yeah.
to say a good topic for another discussion is, how in my mind it seems that I'm a bit more of the quantitative guy. Jose is a bit more the technical guy, and Fahad is a bit maybe a mix of technical and fundamental. So I think it would be a good topic for a future discussion.
Yeah, agreed. I think Fahad is going to be the referee while we're having our TA versus fundamentals fight. But yeah, cool, awesome. I think that was great, and I know they probably went a bit long, but I think we wanted to just set the stage and the foundations to what we hope to be a successful show. So now moving on to Fireside. Not really Fireside, but Fireside is a bit of a twist on the concept that we gave. But I will let Miguel talk about what it's all about. Fire.
Sure thing. So yeah, Fireside. We settle on this name because we want this to be like an intimate discussion that we can have not only the three of us, but we want to involve the community in. We want this to be more of a, a space for paused comments, for reflected opinions. Kind of like if you are in a cozy conversation with your friends or with your colleagues around the fireplace. And particularly, this plays on with the word fire, which relates to the FIRE movement, the financially independent retire early movement, which has been growing in force in the last few years. And it's basically an abstraction or a grouping of a group of people who aim to make financially sound decisions and maybe find some other ways to hustle so that they can grow or stabilize their financial situation so that they can retire early and enjoy life. It's not about being a millionaire quickly. It's more about how can I manage my life and balance the consumer side in my life and my expenses and my income so that I can retire early and enjoy other things in life other than working and making money. Funny enough, a lot of the people who have actually gone through this and have retired early, they continue to engage in projects, but they just choose things that are more meaningful to them. A lot of them go on to do podcasts, write books, or do things of the sort. It just means to liberate yourself from the obligation to work. And this freedom, they testified to the fact that it enables them to live a more fulfilling life. So we have talked a bit about our stances, our base stances on investing and trading, but we do want this podcast to cover more than just financial instruments. There's tons of things that we can talk about, from being an eco-friendly consumer, from managing your savings and a good quality of life, from finding ways that you can actually save money more aggressively while not compromising your lifestyle, from just some instruments that you can use to make your money last longer and work more in your favor. There's tons of things to cover on this. So we want investing to be an important part of the podcast, but there's going to be a lot more coming along with it.
Awesome, awesome, awesome. I think that's it's a very interesting point, which I will let Fahad get into first.
You're muted, Fahad.
My bad. I missed the last part.
No, I was just saying. I marked it. I marked it. Yeah, go ahead. Again.
Yeah, I was just saying, blah blah blah. Fire. It's not going to be just investing. It's going to be also all sorts of other things that relate to the movement as a whole.
What were you referring to, Miguel? Was it?
Oh, just to give your input on because I think FIREside. I'll cut this. I'll cut this
Gotcha.
part afterwards. Just kind of like, because I think when Miguel talked about fire, I think we've been talking a lot about different concepts, and I think when Miguel mentioned the fire, it's like, I think it makes a lot of sense. It's just gonna have a bit of your input on it and what it means to you essentially.
Gotcha. Yeah, I really like the FIRE movement too. Financial independence is definitely one of the goals, and like Miguel said, it's a long term goal, and it's about, for me, it's about learning and applying strategies that work over time and they get smarter over time, rather than hitting some home run and getting lucky, which would be analogous to like winning the lottery. Now, if we do all win the lottery because we pick something that goes up 1,000%, that's great, but that's not the overall goal. The overall goal is, maybe outperforming some of the products that we get for free through our banks and stuff like that, because we feel like we're smarter, and then just continuing to grow that knowledge and strategy to have higher returns over time. And yeah, it's for me, it's more than just what I've invested in so far. I actually started out as a bit of a Bitcoin homer, where my first 6 months, it was all about Bitcoin, and I wasn't even looking at anything else. And since then, through conversations with actually Jose primarily, I probably, most of my portfolio now is in altcoins and very little in Bitcoin. And then I also have some stock plays as well. I also actually apply some of my strategies I've learned in investing into my gambling. So this concept of hedging, I've incorporated into gambling, which I think a lot of people struggle with, because gambling very much is emotional. It's your favorite team, it's your favorite player that you want to bet on, or the underdog you want to bet on. But I've actually applied a strategy where I pick a certain number of, I pick an amount of capital, and I deploy, let's say, 80% towards what I kind of want to see happen. So like if Tom Brady's playing in the Super Bowl, who's my favorite player, I'll deploy 80% of it where the returns come from him winning, but I will deploy 20% of it from the opposite, so that I never go to zero. So that no matter what happens, I'm hedged a little bit, and my return will never bring me back down to zero, and I can keep playing the same game, without ever having to like lick my wounds too much. Which I've kind of learned from trading and investing is if you believe, if you're a Bitcoin boomer, that doesn't mean you can't invest in Ethereum. Or if you're a Cardano homer, you can still invest in Solana if that one does a little bit better. So I think that broad perspective, I think, is really important.
That's really interesting that you bring it up, because we never discussed gambling, or in other words, sports betting, when we were talking about this. Would you say you well, I guess your sports betting, is it like what percentage of it is emotional versus strategical? Like, do you bet because you're trying to have a higher thrill when your team wins, or do you bet because you think Tom Brady actually has better odds than the odds that the house is giving you?
I would say pre 2022, it was probably 100% emotional. It was just, who's my team? I'm going to pick them every week. That's what I want. That's what I want to win, and so forth. And I think this year it's probably, I would say, 75% strategic, 25% emotional. Like it's still fun to have that thrill. It's still fun to be like, oh, pick this thing that has like 10,000 to one odds.
Yeah.
It's still, and I think it's still worth it with maybe 5 to 10% of your money go into that. Let's say you're not investing, you're gambling with $100 of sports betting. Maybe put $5 to $10 in just ridiculous high return, and then I would say the other ones should actually go into, medium risk, medium return, or low risk, low return. Because making like, I don't know, like getting 10 making invest putting in $100 and making 110, like 10% is pretty good for investment, but 10% is horrible for gambling.
Yeah.
You want to make 10x your money, 20x your money. But I think using that mindset, you could probably go further. Like, why not bet on the Warriors to win some game that's meaningless? Or why not bet on Real Madrid to blow up some shitty team that they're playing and make $5 off 100? Why not do that? And so on. That's kind of been my strategy as of late.
Okay.
think
Yeah,
that's,
that's really interesting. Oh, sorry. Go ahead, Jose.
No, I was just gonna say that's it's a very good point when you touch gambling, right? Because then that is actually something that I feel to a certain extent, there's always a component of gambling that goes into any type of investment, right? There's just less gambling or more gambling in investments that you make. And I think it's really interesting on that point because there's always a component of almost like luck, right? And this again has a big impact on something very interesting is like if you have the time, look into the various chemicals that your brain segregates in different stages or different situations you're going through, serotonin, endorphins, and so on, because those are the things that make you make decisions or make good or bad decisions, right? And it's really interesting to on that component of luck because that has a very clear correlation to certain chemicals that your brain releases, and some people release more than others, and probably it could be that that's one of the reasons why people are more risk averse or risk comfortable. And it's really funny to trace that all back to a simple chemical that your brain segregates, right? It's pretty mind bending. But just touching a bit on the fire conversation. I love the name fire, by the way. Whoever came up with this should get an award. Um, I personally, as I said before, I'm a very very crypto centric guy. I have and I had my very brief taste of incredible victory as I still am quite heavily invested into AMC. And for those that know, AMC is considered one of the big meme stocks. And I was there, like between myself and my wife, we won big, but we wanted more, and I think that's one of the things that I really really want to try with these shows is just share some of those stories and learnings, because it's one of those things you always say, if I know what I knew, or actually if I knew what I know now, that would be a very different scenario, and I think that's true. And if we can share some of those learnings to people that are getting into investing, whatever type of investing is, I would be very happy if we can help people actually achieve their financial independence. Because for me, I even think about it as there's another show that touches this concept of financial sovereignty. I love that concept. I really, really, really love that concept of financial sovereignty because it's if it goes a step ahead, and I think that's something that is very, very related to crypto, right? Because there is with crypto, there's this very strong component of almost freedom, right? Because obviously, your money is with someone, and obviously, crypto. The whole point of crypto, or should be, although we are recently finding that it's not as decentralized as everyone would have hoped. But really, I absolutely love that concept because it's kind of not just independence, but it's really kind of you completely, fully, 100% owning that money, right? And you almost you palpably have that money, which is something that for example, with a bank, just looking at, for example, what happened in China very recently, just the banks just didn't have the money. It's my money. No, is it really your money? I don't think it's your money because if the bank is out of money, then it's not your money anymore. So I think there's quite a interesting subjects that we can, over the course of a couple episodes, we can start to dive into. But if anyone has more questions about the concept of Fireside, we would be more than happy to kind of bring that back and have a discussion. But really, in essence, it's just something that is in, like, it's kind of like your carrot at the end of the stick, right? It's what you're working towards. You're really working towards being financially independent and potentially retiring early if that is your choice. I personally have a slightly different view, and obviously retiring, doesn't mean that you retire and you stop working and you just go to the Bahamas and get some sun, right? But really, it's more like, I think they're quite intertwined. The financial independence and the retiring early, they're quite intertwined. Yeah, I think we're going to be definitely touching this many, many, many times in the future. But I would love to have a quick conversation about a very, very present macroeconomic um, idea or concept or situation or fact. Is it fact or fiction? Are we in a recession? Miguel, what do you think?
Well, actually, I'm curious to hear you guys' thoughts. I think there's a lot to peel out. There's a lot of layers to peel out here. Peel out or peel away? Peel.
Any of the two?
Deal.
Just
You
peel.
peel. You just peel.
All right. Well, I'll leave it. I'll mark it, but you can remove it if you want.
Some of these are funny. I'm
Yeah,
definitely keeping.
I think there's a lot of layers to peel on this one. Um, in my head, in my mind, from what I've seen, we are in the early stages of a recession, um, and from the indications that from the signals that I'm seeing, it looks like it's still going to get significantly worse before it gets better. Um, I guess I'll start with this. We've seen a great deal of discussion in various media outlets about what it means to be in a recession. What's the definition of a recession? And officially, the consensual definition of a recession seems to be having two successive quarters with a decline in GDP. So, by that definition, it seems that we are officially in a recession. The US market just really stated that indicates two successive quarters with a decline in GDP. Funnily enough, also there were some ramblings about maneuvers by the White House to redefine what a recession is. I think that's the timing is quite interesting. Um, and to add to that, and then I'd like to hear more of your thoughts. One of the points that I've heard against we possibly being in a recession is that usually there's two main indicators for one, which is a decline in GDP and also a a rise in unemployment. And the argument here is that while we have had reduced GDP, we haven't had a rise in unemployment. So, yeah, in my mind, I think if there isn't yet a rise in unemployment, it's just a lagging indicator and it is to come. But what are you guys' thoughts on this?
Go ahead. You can go.
Yeah, so for me, I think so I don't think anything. I look at what's happening and form a position based on numbers, trends, indicators. So what, like if I think, if I just think stuff, how meaningful is that? But to your point, Miguel, I think the GDP indicator is an important one, and that kind of proves that we are, at least the U.S. is in a recession, broadly. And then from there, for me, it's more about what does that mean, and then how does that dictate decisions in this recessionary time. So whether we're in a recession, whether we're in bull market, um, it's important to figure that out concretely, but that's not the end for me. For me, it's like, okay, we're in a recession. Does it now make sense to buy on the way down, or does it make sense to wait till things are lower? Does it make sense to buy and exit quickly because we know things are going to get worse, and so forth? So I think, for me, I think figuring out whether we're in a recession or not, or anything like that, is fairly simple. And once we figure it out, it's then a matter of how does that dictate how we think and how we decide on stuff, which is kind of where my head is at. Like I'm not too emotional about, if everything's going to go to shit, that's great. If we know that, let's just buy stuff on the way down. If we feel like we're at the bottom or we're close to the bottom, let's kind of hold off and start selling on the way up and stuff like that. So that's kind of where my psyche is at currently.
There's a really interesting concept of empowerment. I feel of I wouldn't say being on the inside, because really we're not. None of us is on the inside of how these things work. But if you do want to, just as a small side note, if you really, really want to see what people on the inside are doing, have a look at something called the Unusual Whales. So Unusual Whales is a service that a guy started a couple of years ago, and what he does, he basically just follows the option chain and option market, and because that is a market, because you essentially it's got you're buying options and all of that stuff kind of gets registered. You can actually follow. He talks about kind of like following the flow, I think, which basically shows. Especially, he has this a unique section on his website which is related to Congress, and which is like a big debate we had ages ago of like, should people in Congress, should people in positions of power really be investing? And isn't it kind of like a bit dodgy, because the kind of going back to inside knowledge, you have a lot of inside knowledge if you're on the inside, right? And so it's really interesting to see that, for example, there is really interesting, really dodgy investments, multi-million dollar investments by some very key people in Congress before, say, a company goes public, or say a company is about to announce a merger. And you go and you look at the options chain, and all of a sudden it's like, how did this person know, right? Nothing happens by accident. So this was a bit of small tangent. If you have a bit of time, take a look at the Unusual Whales. It is an incredible tool. It basically is insane. What this guy is doing, no one else in the world is doing. And if you're looking into potentially placing some riskier investments, I would definitely suggest checking him out, because why should you not follow someone in the Congress that potentially has some inside knowledge, right? If you can't beat them, join them, I guess. But yeah, it just shows how fundamentally broken the whole system is. Like it's just absolutely right. I heard this before of like we're just basically a flea on a camel's back, so we should just enjoy the ride, right? Because none of us have even the power, close enough the power to make any dent on anything. And really, it's just it's a very interesting concept of just kind of following what the other big guys are doing, and you're gonna end up making some money. So that was my tangent, my tangent done. Now, just going back to the recession part, are we in a recession? I don't have any. I don't think I've got any doubts that we are. I think there's just you know, if we didn't have a war going on, if we didn't have all this money that and I'm speaking very specifically about the U.S. because again, U.S. is a leading market in all of these things. You know, if it wasn't COVID, now obviously, I rightfully, I completely support the amount of investment, not reinvestment, but like support that is being given to Ukraine and so on. But obviously, again, all these things. There's always, it's kind of like the Newton law of physics, right? There's always a reaction for an action, right? So all these things will have a reaction. Same thing that all the checks that were given, all the money that got printed, we are paying for it now, and we knew we were going to pay for it now, and all the bubble that generated in I think the peak of the bubble, if we want to talk it about as a bubble, was around November time, October, November, really was the peak, and then all from there is just started to kind of go downhill. And for me, one of the biggest indicators is not just the GDP and so on. It's just looking at the earnings. Look at the earnings of all these tech companies. Like it's just like disaster, right? They're losing. Of course, a lot of them are probably down to just not really evolving and competition. There's more competition than there ever was. But just to it's just another example, like a bit of inside knowledge. I run a business, and like any business, you live off of borrowing money in certain stages of any business life, and generating debt to then generate profits is a very common life cycle of any business. And 3 months ago, I was speaking with a particular company, funnily enough, a company in Canada, and they were offering us like insane, like, oh, hold the money, use all whatever money you need. There was no limit. It was just like whatever you want to take, you take, and then you just pay a remittance rate, which basically means based on our turnover for that particular period, we then pay them back a certain percentage, and that's what goes towards paying the loan. And just a week ago, we contacted them again, and the answer we had from them was like, we're closed. That's it. There's nothing. We stopped all investments. We're basically internal restructuring of the company, and the only thing that came to my mind was,
wow,
everything is going bust. Every single thing is just going to schnitzels, right? Because if they are going bust, and we always need to look at the chain, right? For example, if you want to know if the high street is going to go bust, you need to look at the manufacturing side, right? You need to look at the source of things, because if the manufacturing side is going bust, it's a matter of time until that. Think of it as like almost a sound wave, right? The sound wave takes time to propagate. So all these things are sound waves that are occurring around the world, and you're starting to see, China having serious problems in their country. China is now potentially moving towards I'm not going to call it a war, but something potentially happening, with all this Taiwan situation. And if you think about it, China is the manufacturing central of the world, right? And if this continues to get worse, it's going to be a matter of time. So if we think, and it's just going back to what Miguel is saying, if we think things are getting worse, I think they will still get much worse, right? Because we still have not seen the full ramification of what is potentially going to happen. Now, I think everyone should look at this as an opportunity, and I think, look, knowledge is power, right? That's just how it is, and knowing and understanding these things is a step towards, because again, millionaires, billionaires are not made in a bull market. They're made in a bear market, right? And I think this is super important for people to understand, especially if you're getting into it now. This is something I understood over time, that you see those green bars and you're like, whoa, endorphins, let's go. And but really, you're not the I would really like in a future episode to touch the psychology of the market, especially things like Elliott waves theory, because that touches the psychology of why is it 5 waves up or why is it 3 waves down. And there is a psychology to it, and it's incredible when you look at it. And by the time that you're going in, it's already too late, right? You're already going in way too late. So starting to be able to understand these patterns, and this is why I love TA so much, because it when sometimes it looks like magic. Like you draw a line, or look, you draw a Fibonacci, and it's just like, what is the matrix? Like we live in everything is predefined, right? And it is insane. It's kind of really feels like you're seeing the matrix sometimes, and that's one of the things I absolutely love. So just kind of like rounding it up, are we in a recession? I have no doubts. Could things get worse? I think they could. I think they could.
Yeah, there's a lot to unpack in what you said.
I'm sorry.
And I was no, it's okay. That's great. I was hoping one of you would be like, "Nah, we're not in a recession. Are you crazy?" But it turns out we're all in agreement. And I will say, I like that Fahad was saying, are we in a recession or not? It doesn't matter too much because we're just going to follow our strategies anyways. We're just going to be primed, and when there's an opportunity, we jump on it. I do think that one of the criteria for a lot of strategies is the market bias, right? And events like switching from a bull market to a bear market can have a huge impact in some of these strategies. But as far as trying to sum up maybe what Jose said later, I think one of the biggest points for me is there were measures that were taken with quantitative easing during COVID to support people in the most unusual of times that we've had in the last couple of years. But the truth is, there is a bill to be paid for this. I mean, 40% of the money in circulation today was printed in the last 2 years, which is nuts. It's really nuts. Obviously, it's unsustainable because if you multiply by 40% or add 40% every 2 years, then the money is worthless every 2 or 3 years. And to keep this money, to keep the dollar being worth something, then we have to up the interest rates. And to do that, we put pressure on business. And so that's exactly what Jose is seeing firsthand with this business. And tech businesses, many of which I have heard first and second hand, are struggling because of this, and they're preparing for tougher times. And that's why I say, if unemployment is not on the rise, it is a lagging indicator for sure, because business are under pressure and they have to, protect themselves. By one of the strategies would be reducing headcount, or go under, in which case there is more employment either way. So I don't see a future in the next 3 to 6 months where unemployment doesn't rise. And so by all accounts we will be in a recession. I think it's pretty unavoidable. But yeah, I think in the end Fahad is right. We can discuss whether we're not we're in a recession, but we just have to stick to our guns, stick to our strategies, and look for opportunities either way.
100%. 100%. 100%. Cool. All right. So I think we're all in agreement. So we have 100% bias towards recession. Again, obviously a lot of business, a lot of people, and I think that's always the other side of everything that we do is you know there's always someone on the other side that gets hurt, and that I would either be the the maybe the employee, or because again there will be a lot of businesses unfortunately going under, and it's horrible. It literally is horrible. Like let's put it this way, a recession is a bad thing. Let's make it like it's very clear, like it's a bad thing. But obviously, what we're trying to say is that even though it's a bad thing, doesn't mean that people can't try and benefit from it, right? Because if it's something you can avoid, then obviously one thing. But if you cannot avoid, it's like if you're surfing, you're already riding the wave. Just ride the wave, go with it, right? Don't just jump off. So I think that's kind of like the key point. So moving on to our tip of the week. Fahad, tell us what is the tip of the week?
Sure. So I think I have some tips. So we'll call it tips this time that I think is that I think are all valuable to learn. Um, so something that I struggled with early on, and now I'm quite disciplined about, and it's paying off, thankfully, is always defining a position as investing or trading. And the way I define those two is just time horizon. So a trade is something short term. So I would say at the maximum, I would trade for about a month. And a month is still, I think, a bit too long. I think with a trade, I'm looking for a return within a couple of days, if not a week or so, and so on. So very short term, very technical, um, uh, and having a and having rigor and discipline around when you're going to enter and when you're going to exit, regardless of whether the exit is in your favor or not in your favor. I don't believe in every trade becoming an investment just because it sucks. That doesn't make any sense. And then investments for me are anything longer than a year. So I'd say between 1 year and 10 years is something that I would personally define as an investment. So I think for everybody, it's important to have this differentiation so that you know why you're getting into something. And then obviously it can be different for everybody, but this is just kind of how I think of it. So my second tip, and this is something I kind of picked up. I forget from where, but it's helped me significantly, and I want to kind of share with everybody. Is when you're about to enter a position, try to look for your pattern or try to look for your indicator on different time frames. So with a trade, I always look at 1 hour, 4 hour, and maybe 1 day. And if I'm seeing the same thing on all three, I will then enter. And then same thing with an investment. Like if I'm seeing the same thing at 1 month, 6 month, 1 year, and it's clearly showing that we're at a point where I should buy, and then we'll see an uptick within that time horizon, that's when I enter. And then if it's 2 out of 3, depending on which two, maybe that's still valid to go in. If it's 1 out of 3, I would say don't buy. But specifically for trading, if you're seeing the same pattern at a shorter time, at a very short time frame, medium time frame, higher time frame, it's clearly the same pattern, and then you should enter. Um, uh, and then third tip is, you're not leaving the game if you lock in gains. So if you're up 10% on some position and you exit, you're not exiting crypto or you're not exiting stocks completely. You're just locking in your gains, and now the next time you see something, you actually have more money to go into it with, and so on. And then on that same point, like you also don't have to sell 100% every time. just like you don't have to buy 100% every time. So if you're playing with $1,000, like you don't have to put in the thousand like now. You can put in $100, $50, and so on, and kind of see how it goes, and that gives you enough room to dollar cost average if it keeps going down and so forth. And then on your way out, you don't have to sell 100%. You could sell just your investment. You could sell just your gains. You could sell 50%, 25% to lock in something as things go up. And then lastly, my last tip is more, I think, qualitative. It's psychological. I think you first got to look at what's happening to form a hypothesis rather than forming a hypothesis and then looking for confirmation bias. So if I just have this feeling that like, oh, I think it's going up, I think we're not in a recession, I could probably find 5 articles, 10 articles, 10 charts that show that we're not in a recession and just believe them. As opposed to looking at things kind of with like an empty mind and then filling your mind with what you're seeing and then going off of that. I think that's hugely important. Because when in my early days, when Bitcoin was at 50, 60,000, I was like, oh, it's going to 300 next week. And I would form that hypothesis and then look for Twitter accounts or YouTube videos that just like enforce my bias rather than actually looking at what just happened over the last 2-3 years and are we at the top, are we close to the top, and so forth and so on. So those would be my tips for anybody that's been in this for 6 months to a year. I think those are valuable lessons to kind of keep in mind as we move forward.
For sure. I think the confirmation bias is a huge one, and it's one that you have to consciously catch yourself. You have to check, consciously that you're not doing it. And to that point, I think that's another topic that we should dive into deeper. All the bias in trading, because I don't think of myself as a very philosophical person, but when I first started, trying to make some money off of stocks and crypto, I realized that I got a huge slap in the face by some of these instruments that I was trading, because they're really merciless. They don't care what you're thinking. They don't care what you want them to do. They're just absolute truth about whether you're right or you're wrong. And so you really have no way of saying I kind of traded this well or kind of traded this poorly. You either won the trade or you didn't. And for sure, the more important, well, the more important is to make profit, but the most important approach to making profits is to trade correctly. But you have to be able to evaluate that by trying as best you can to remove your bias, knowing that you won't 100% be able to do that.
Yeah, I think that's a great point. And I would even add on to this. I think not just making profit, but consistent profits, right? Because just having a winning trade doesn't mean anything if your next 9 trades are losing trades, right? So having this, I suffer from this quite a bit, which is, I want more and more and more. And if I'm only making $10 on a trade, I kind of like, I don't get enough of my endorphins, being produced in my brain to just get into it, right? But money is money, right? If you make 10, you make 10. That's 10 extra that you didn't have before, and that's 10 extra that now you can reinvest to make more money, right? But it's really difficult to get around this mindset. So I think one of the things that Fahad touched, that it's absolute, like if there was a Bible, it should be there, which is, you don't need to make a full trade. You don't need to exit or enter a trade at 100% of whatever money you have. On the opposite, you shouldn't. And just kind of very briefly touching what I do, for example, on exiting a trade, I do something that I call the 50-50 save the rest, which basically means that on any trade, I will sell 50% of that trade at the level. And then, depending what happens after, I will sell further 50% of that trade. And whatever is remaining from that trade, I move it into a long-term investment portfolio. So this is kind of a bit of a, I see myself as a hybrid. I don't see, and I think it's something we're going to probably touch in the next couple of sessions when we get into the psychologies and the stuff that we personally do, because I struggle a lot. If you ask me, are you an investor or a trader? I can't tell you, because I'm a bit conflicted on what I do, because I like to trade because I like the idea of having quick gains, but at the same time, I like the idea of being in the market, right? And sometimes, and the same thing that I forget a lot of times, is that being in dollars is also a trade, right? And it's a lot of things like people need to remember that just because you're not in the market doesn't mean that you're not trading, right? And so it's a very important concept to grasp, and we'll I think we'll touch a lot of these things in the future. But Fahad, thank you for that. I think that the tip of the week, number one, that was great. That was really good. I think it's very important, and you just opened a tiny bit of a Pandora's box to further discussions. Especially personally, I love the idea of the investing versus trading, because people like myself, I'm sure there's a lot of them, and this is something that leads you to make mistakes, because it will confuse you. You will get confused with your kind of what the hell am I doing? Like, I thought I was going to be a week here, and it's been like 2 months, and I'm still here, and I'm not making money. What am I doing, right? And we'll touch those things. So we're a bit out over time, as we always do. We said in the beginning it's going to be between 30 and 50 minutes. I think we're just around the 1 hour mark, but I think it was an important one. Just before we wrap up, any parting words, Miguel?
I gotta say, I really enjoyed this discussion, and I'm looking forward to seeing what kind of other discussions we can generate, and what kind of other assumptions or other parts of our approach to the markets we can challenge and we can improve over time. And yeah, I really enjoyed the discussion with you guys.
Yeah, likewise. I'd love to hear from our listeners what they think of like our like whether we are or aren't in a recession, and how far are we from the bottom and stuff like that. And I'd love to hear some of their thoughts as well, on investment strategies, trading strategies, like the one Jose just mentioned about the 50-50. I think it's really interesting, and it might be something I kind of dabble into as well. Um, so yeah, I think the more the merrier perspective that we get from our listeners and you guys, I think is great.
That's a great point. I think we're here to learn as much as we hope that we can share. None of us, none of us is an expert, but we are. I think the thing that we share is that we're very hungry to learn, hungry to hungry to make money, hungry to become, again, financially independent. And I think that's one of the things that we share, and hopefully we can share with all the listeners. So just before we go, we're still deciding on how frequent these sessions are going to be. We're more than happy to keep them as close or as farther apart as, obviously, people feel like. There's a lot of stuff out there, and we will do our very best to be unique in our own way, and I think we'll be able to do it. So until next time, I hope you guys stay cozy by the fireside. So I'll see you next time. Bye bye.